I know sometimes insurance gets a bad rap, but we're dealing with some significant and sometimes life and death situations of what employees are going through. And we've got to remember that. And sometimes it's easy to lose sight of that, but we're dealing with ways that really affect people's lives.
Introducing Checkwriters, a video podcast for people who want to help their employees, colleagues, and organizations flourish and succeed. I'm your host, Dakota Hebert, Chief Marketing Officer at Checkwriters. Along with my co-host, HR Manager Felicia Corbeil, we'll hear from business leaders and pros who share captivating stories from their respective industries. Join us as we uncover their strategies and get unique inspiration for building great processes and experiences at your own organization. Check out and subscribe to Checkwriters on Apple, YouTube, or wherever you listen and watch your favorite shows. Thanks for watching. He jokingly calls himself the Grim Reaper of health insurance. But Mike Welnicki actually stands out in the employee benefits industry, not because of the tongue-in-cheek comparison to the angel of death, but rather because of his relentless focus on education, both for his clients, their employees, and his own team. He's also one of the most accessible employee benefits advisors in the industry. In fact, Mike says if you don't hear back from him fast, you ought to do a wellness check. After 25 years in the employee benefits industry and roles in sales, service, management, and now owner, Mike Welnicki of Weber and Grinnell Insurance Agency is an invaluable resource in the benefits world. Listen to this episode of Checkwriters to gain insight from this industry veteran about building a benefits plan that works for your organization, the differences and benefits of captives, HSAs, and HRAs, and his diagnosis of why costs continue to rise and what employers can do to address it. So what are the top challenges facing HR business owners in the realm of employee benefits? And we can just list them out, like maybe, I'm sure you have 2, 3, or 4 that you could rattle off as these are the main things that always seem to come up in what you try to address in your role.
I think, first of all, the biggest challenge, and I don't know how long you practiced it, but you got my last name perfectly. So
Welnicki?
a lot of times that doesn't happen very often. So great job on that.
I like when I do that. Yeah,
it was perfect. Really, from a challenge standpoint, I think the number one thing when we go into employers to talk about what their employee benefits looks and feels like, it's what's the experience from the employee. And a lot of times it's what the employer feels and how they feel about benefits. And that goes into that offer to employees. So we really want to find out, why do you offer employee benefits? Do you offer it from a retention tool, or is it something you offer just because you feel like you have to? And that really starts a great conversation with that employer to really take a look at, am I going to put all this resource into my benefits? And if so, let's find out. Let's find out what we really need. What are our employers really asking for? Those employees that we're trying to hire. And I think a lot of times it brings on a lot of conversations where surveys go out after that, and getting to understand more about their employees' needs rather than what they think is need to be offered. It's what do the employees really want to see?
I was actually reading something about that. I think it was listing how a lot of articles these days will like list out, oh, these are the different generations. Yeah. And here's what millennials want. Here's what Gen X wants. And here's what's the new one? Gen Y, Alpha, whatever. I don't even know anymore. But it's every generation they're saying wants different benefits.
Yeah.
Jamie, you guys want student loan repayment. I'm sure like the 60-year-olds probably don't really care about that.
Yeah.
So how does that work?
Yeah, I think a lot of it depends on the employer. Does the employer want to allow that feedback to come into their decisions, or do they want to just say, I know what's best for my employees? Mm-hmm. And what we're just finding out more and more, as it's so hard to retain and attract new talent and keep the talent you have, more and more employers are listening to their employees. And that's one of the things that I've really liked about the last 4 or 5 years. And probably maybe a little bit before COVID, but certainly after COVID, what we're seeing from what employers are really looking for. And they're really asking a lot more of their employees. And I think employees really appreciate that their voice is now being heard more so than maybe it was 5, 10, 15 years ago. Student loan repayment, that's such a big thing that we're seeing out there right now. Mm-hmm. Obviously, the cost of benefits is a big deal, the cost of health insurance, and we're seeing it go up. But that's really something is who can pay or who's going to help the employees from a contribution standpoint. That's big. But I think that the repayment, the 401k piece is another factor. But as long as employers are listening to their employees, I think that's made such a big difference in benefit.
What sort of developments have occurred in the past few years or more recently that have driven you as an employee benefits advisor to look at new solutions or different products?
Yeah, I think one thing that's really come to the forefront, and a lot of it is geographic areas and where you're working. And so Western Massachusetts, typically we're more about smaller business community. We don't have a lot of the 1,000-person groups, much like a major metropolitan area or Boston or New York, some those areas. So typically the client size out here in Western Massachusetts is in that 15 to 100 employee range, and probably more so towards that 50, 60, 75. And in the past, there really haven't been a lot of options outside of the fully insured realm with the Blue Crosses and all the carriers that are out there. But one thing that we're starting to see more and more for companies that are in that 50 plus range that don't get experience data on their benefits. So they're really not able to see what their claims look like, what their medical spend is, what their pharmacy claims utilization. We're seeing a lot of movement around level funded plans and captive plans to where you're now banding together with other similar sized companies with similar philosophies. And now you're getting more experience data. You're getting more transparency. And I think that's probably the biggest challenge in my role and probably always has since 2007 is that companies, for the most part, here in Western Massachusetts are not getting any transparency. They're not getting to see what their claims looks like. So they really can't make benefit decisions because they have no idea what's really happening, what's driving their rates and renewals.
I've heard that term before, captive, but I don't know what it means.
Yeah, so captive insurance programs probably been around from the benefits side about 2011, 2012. I think the first company that really came out with these is a company called Pareto Captive. And this is something where a company of 50 or 60, 70 employees can be self-funded. They're going to get to see all their experience data. They're going to fund their claims. But instead of taking on all that risk themselves, they're now pooling together with 200 or 250 of similar sized companies or similar industry companies. And they're going to offset some of those bad years they have with some of the good years that those other members have. And so you're pooling it. You're not fully rewarded in those great years, but you're not really hurting yourself in that one bad year that you have. You're going to be able to share and pool those resources together, which I think it's been a huge benefit for these clients that really want to see more transparency. They want to take on more risk themselves because they think they're going to be able to control costs better.
Got it. That makes sense. Yeah, I think we have several school consortiums that do that too. So they band together and they're able to
absolutely
get some more competitive options. Let's talk about cost of health insurance for a little bit.
Oh boy, this is the fun part.
Yeah. When I was researching the cost of healthcare, just the average cost of it for a family plan in 2024, the average cost is $24,000.
Yep.
And that's, of course, the employee and employer portion,
right,
of which most employees pay about a third. Like, how, besides that really great example you gave with the captive insurance, is there anything that an employer could do to help reduce the cost for themselves, but also their employees?
Yeah, it's certainly a tricky one. And we've seen employers try to tackle this in a number of different ways. From the insurance company standpoint, when you're getting those renewals and those rates every year, the plan designs for a lot of the companies are going to be set from the Division of Insurance in Massachusetts. So there's not a lot from a plan design and customization standpoint that certain employers can get to.
Is that specific to Mass or do other states do the same?
Other states do that the same, yeah. If you're a 50-person employer group or 45-person employer group, the rates that you're getting from the carriers, they're going to be set from the state. There's really no negotiating power. As you certainly get into the larger group space, the 50 plus, you have the ability to go out to other carriers and also rate negotiate a little bit to help come down a little bit. But without that transparency data, it's really hard to make those arguments to come down a little bit. So I think what employers are starting to do, and they've been doing it for some time now, is looking at things like deductibles and healthcare reimbursement accounts, healthcare savings accounts. How do we kind of cost shift some of the deductibles and self-fund some of the deductibles here internally, or provide funding arrangements such as HSAs to where they're helping those employees put money away like a medical savings account. One of the things that came up, and I think it started with Delta Airlines and UPS, is they started doing these spousal surcharges to help try to save the employer money. These are very difficult, and if you haven't really seen what this looks like, this is where employers can say, if you have an employee that wants to put their spouse on the plan, but yet their spouse has an offer of coverage at another employer, if they come onto your plan here at Checkwriters, they've got to pay an additional amount more so than anybody else with an employee spouse plan. And it's really putting a lot of pressure on those employees with working spouses that have offers of coverage elsewhere just to try to save the company money. And we've seen it more backfire than anything else because employees then don't feel like this is really a benefit for me. You don't care about me and the family. You just really care about the employee as a whole.
I see.
Yep. And then on the flip side of that, I know that there's some companies where if the person says they're not going to enroll in insurance, they pay them more.
Correct.
Which gets really tricky because then what happens when that person decides a year in they need insurance?
Correct.
It's a little funny how that works.
It is. Yeah.
But you mentioned HSAs and HRAs. So can you just explain a little bit about what each of those things are? Because they're very different, but they're also very similar.
They are, in a lot of ways, they are both. You're right. They're similar and they're different. Healthcare reimbursement accounts are really employer-funded accounts to where an employer is going to put certain funds into each person who is enrolled in the healthcare plan to help for things like deductibles and copays. And they'll set those limits up front to say that if we've got a $2,000 medical deductible and we'll put $1,000 in for a healthcare reimbursement account, That's going to be for deductible only. That means the employee is going to pay their $1,000 of deductible, and the healthcare reimbursement account, which will all be available on day one, will help fund the other part of that deductible. So it's really a way to help lower the out-of-pocket expenses for that employee. Where the healthcare savings account becomes very tricky is that money that goes into those accounts for the HSA for the employees has to be tied to a high deductible healthcare plan. And those high deductible healthcare plans mean that all plans or all copays or all medical services you have other than your preventive exams goes towards your deductible. So somebody who's used to paying a $20 copay like they have forever now goes into your primary care doctor, and that's going to be $125.34. You're paying that full cost of it. So people are really getting to see what that full doctor charge is going to be each time. But these HSA accounts will allow both the employer and employees to put away tax-free funds to help offset those costs, but also build towards a long-term future. And I think we're seeing these HSA plans become medical retirement accounts where employees are putting funds away in 10 years, 12 years down the line. They've got $10,000 or $12,000 built up. They can use on things like Medicare premiums, long-term care insurance, a lot of applications outside of just the healthcare insurance. But the HSAs is really a way that it's starting to educate the employee a little bit about just how expensive the cost of care really is.
Speaking of the cost of care,
Yes.
I had told you about this a little while ago, but I took my son to the doctors a few months ago, and we paid $200 for a flu test. And that just blows my mind because why is a flu test $200? But then also I was shocked that was the part that I paid. The insurance company had already paid a portion of it.
Yeah.
So is that something you're seeing regularly now with just services and certain visits being more expensive?
I think much like when you and I go to the grocery store and we see the cost of groceries is going up 15% than maybe what was a month ago or last year, the providers, and the interesting part is the providers have the ability to charge whatever they want. But to be in the network, there has to be that contracted rate between a Health New England or Blue Cross and that provider. So when you look at an explanation of benefits, as you did when you get that flu shot and you saw that the provider charged $650 and the allowable amount was $400, providers can keep charging all they want to do, but that contracted rate is going to be set. But to your point is that number keeps going up and up. And one thing that we just went through in a company like Cigna, and not to bash a carrier that we work with, but they just had a couple of major contract issues with some of the largest providers, Trinity Healthcare Systems and UMass providers, UMass Memorial providers. And this was a contract dispute where both sides, Trinity wanted more money, and really Cigna balked at that. And the problem there is that these providers can keep asking for more and more money. And if they hold off, that means employees who their primary care doctors are there, their specialists, their OBs, are a Trinity Health provider or are a UMass provider, they now have to go elsewhere. And so it really puts the employees in the middle because of the greed on both sides of the fence.
Yeah. Did you say greed?
Oh, I did.
Yeah.
Oh, I did.
I know.
Yeah.
That is how a lot of people look at the industry.
Yeah.
So it's tough. Do you ever feel like you're getting a little bit of that, Mike, why aren't you getting these rates lower? Like, you're the guy. You should be able to go and talk to.
Yeah, the phrase that I use all the time when I go in, I'm the Grim Reaper of health insurance. I should come with a sickle. It's wonderful.
Yeah,
It's a tough job. Certainly without, I think, again, the hardest part is no transparency. So property and casualty coverage, and that's a big part of our business at Weber and Grinnell and Alera Company, is that they get loss runs. So for commercial accounts, they can see all the loss runs, all the loss histories, and that's on any size group. The health insurance, we can give you a 18% renewal from Health New England, but there's no data to back it up. Here's your 18% increase. I can't tell you why. And that's such a difficult pill for everybody to swallow when we feel terrible about it. And the employer now has to explain it to employees. And that's where the transparency piece, getting the ability to self-fund and to be in these level funded programs, to see that actual data, to then be able to make real life decisions on what you're doing and not moving to plans that it's going to hurt your employees if we do this because of X, Y, and Z.
Yeah, absolutely.
And I also want to mention, so Dakota, you had asked me if I'm able to see some of that data, and I told you how I couldn't. And it's one of those
I thought
things
you were
where-
going to say you had asked me to sign up for your FSA and stuff, because sometimes I do that when I'm late. I'm like, can you just sign me up for whatever I had last year?
That's exactly what I do for Dakota. But no, so it's interesting how you can't see the data. Of course, it's frustrating from that perspective of you're telling your employees, oh, the cost is increasing, but you can't really say why. But then from the other standpoint is you don't know why. And that also protects the employee because you don't want to be discriminating against the employee because they have a certain health condition that maybe you don't know about or they're costing a certain amount or they had some very expensive procedure done. So that's also from the HR perspective, it's very important to not know that information?
Yeah. And I think there are certain ways when we look at our clients that are self-funded or have those level funded, those captive programs, the data that comes back is very protected in terms of what it shows. It shows prognosis, diagnosis, the dollar amounts, but it's really never going to get into who that employee is. The difficult part that Felicia's talking about is your employees will volunteer a lot of things, and you probably know a lot about your employees and who this really is. And so you get into HIPAA situations where if something ever happened to that employee, could they ever come back and say, you know about X, Y, and Z? And it puts you in a really tough spot. So it's really trying to balance that with how do we get a little bit more data to make those decisions that's really not going to affect people in a negative way.
So we've been talking a little bit about what's going on in the insurance industry right now, but you've been in the industry for a while. And I think you mentioned that your father was in the industry too?
He was.
Combining that sort of look at the landscape as far as your journey through this industry, what are some of the things that you say, this has never changed? This is like the foundation of my industry. I know that this is always going to be the same, and how do you use that in your everyday endeavors?
Yeah, looking back at the history of how I got into this, I went to Springfield College to be a kind of a gym teacher, recreation management major, and I think about 3 weeks in, I said, no, this isn't for me. And I knew my dad in insurance. He was an actuary, and I like insurance, and I like numbers, but I don't like numbers that much. I'm not gonna be an actuary. There's no way that's gonna happen. But it definitely gave me some good insight into insurance, into what employee benefits, into what health insurance really might look like. I think the challenge has always been the cost. I think even 15, 20, 30 years ago, it's always been about that cost and that plan design, and that's just
which of
elevated.
course is always going up.
Always going up, but the plans are always getting less rich. And you look at 30 years ago, you would present your ID card for a Blue Cross and you'd pay maybe $5 and all your care is taken care of. Mm-hmm. You look at what it is now, and we're paying rates that are $730 on average for a single employee in Massachusetts, and you're getting an average of $1,675 as your deductible. Those are difficult things for people to swallow and to not understand that. So for me, from an insurance standpoint, there's not a lot that I can do to help from a carrier effectiveness standpoint to make them change rules. We can certainly have a loud voice, but how in this current system can we help employees try to navigate that? Can we help employers navigate that? And so for me, being that sounding board or that extension of the HR team at companies to work with employees one-on-one so that you as the employer are not knowing all the difficult things that your employees are going through. How can we help navigate that system? Because to the employee and to not me, I know the system pretty well, but to most employees, they don't. And so when they get a bill for $1,800 and they don't know, is it real? Is it not real? I can tell you the amount of fake bills, whether on purpose or by accident, that we see come across our desk every day. It's alarming. And that's a big part of our job, to help alleviate those fears that employees are real and they'll call and they're nervous and they don't want to be put in some kind of financial hardship because of a bill. But I think when you investigate that out to see what's really accurate and what's not, it's pretty telling to see how many claims that we've helped appeal that are just nowhere near accurate.
Wow. So it sounds like the one thing that has always been the case is that you just need to be able to take the arrows.
Yeah, I think you do.
Yeah.
You feel like Roger Goodell from the NFL, just taking a beating from all the owners. But I think certainly for me, most satisfying part of my job, it's certainly nice to win a new account or to bring on new business. But the most satisfying for me is helping an employee through a problem or helping an HR director solve an issue that's been really gnawing at them for a while, and how to help relieve that. That's always been for me. I'm not really a salesperson knocking on doors and those things. So I know how difficult it is. And what I try to do is put myself in your shoes. And if I got a bill for something and I had no idea how to navigate, I was given an 800 number and said, good luck. That won't work for me. How can I get a hold of somebody that's going to help walk me through start to finish, help write appeal letters, help do these things? For me, that's everything. That's the reason I get up in the morning to do what I do, because everybody needs help.
And that's such a good point that you say that, because back to my $200 flu test bill. When
She wants a reimbursement for that. Yeah.
I would really like the doctor's office to charge me less,
Yes.
but that won't happen. But
Yeah.
no, when I called, that was the first thing they said, oh, you should talk to the HR person at your company, or you should talk to your benefits
And
administrator.
you said, I am.
And I said, I am that person.
You said, talk to you.
And I said, I know our plan hasn't changed, but that's their immediate response. And I was able to have that. No, I know nothing changed with our health insurance, but a lot of other people to have that immediate response. And they're like, oh, I don't know. And of course, then they come to me or they come to you to ask those questions. So I think that's really important to be that guiding person. A lot of people need it because a lot of practices really seem to take advantage if they can.
They do. And what makes it even tougher too is because those deductibles have gone up every year, they're putting more and more pressure back onto that member, and more so than we've seen in years past. Just medical debt is climbing up through the roof. And so because of that aspect, people skipping out on bills or whatever it might be, these providers are asking for a lot of money, if not all of it, up front. And that's very jarring to say, I owe $1,200 before you can have this MRI done. It's not a fair system the way it is. So one thing that I can say is that my doctors hate every aspect of seeing me because I question absolutely everything. And you're not wrong to do that. We always trust our doctor. Our doctor says, get this test done, do this. And we want to trust that our doctor is looking out for us. The doctor-patient relationship, in my opinion, has changed so much. It's no longer about quality. It's about capitation. How many people can I see? I've got to make more money. Why? I've got student debt loan that's way more than it ever was 20, 30, 40 years ago. We've got doctors not going into the primary care internal medicine because they've got to pay for that school debt. So they're doing specialists and OBs and the specialist practice to make more money. And that's why it's so hard to see a doctor. It's so hard to see a primary care or a pediatrician because they're not making that same income, and that's part of it. What I question every time is this.
I was going to ask,
right?
could you tell us the questions? I want to know. I want to know some of these.
Every time. So every time I go to the doctor, whether it's my kids going, my wife, myself, I'm getting that explanation of benefits, and I'm saying, did this really happen? Because we want to match up that bill from the provider with that explanation of benefits to make sure those codes are right. And so where we've seen the biggest kind of downfall here is that many times we see bills from employees where the provider says the discount from Blue Cross or Health New England was X amount of dollars, you owe this. And then we call Blue Cross or Health New England and say, we haven't seen this claim yet. And so that claim is completely, you want to say fraudulent, but it's not accurate. And so in that case...
So when you said fake bills on the other, that's what you're talking about.
Yeah, it's whether it's somebody coding it incorrectly, the 19-year-old kid behind the desk coding it incorrectly, or something's being done on purpose. I don't know if this podcast can get me in trouble by saying these things.
But even if it's not, it's human nature, and in some of that stuff, they're like, hey, you know what? It'd be better for us if we do it like this.
Yeah, they probably won't notice.
Yeah. Think about you're 30 years old, you get a bill for $500, and they threaten you're going to go into medical collections.
I shouldn't say it's human nature. I should say it's like understandable with human nature that somebody would do that, but it's not. We hope that people don't do things.
You would hope, but to somebody who gets a bill that says you're going to go into medical collections unless you pay $250 for this, it's going to freak them out, especially if they care about what their credit score looks like. And so I think a lot of times that's what happens, and you're getting people to pay these bills, and they're overpayments, and sometimes they get self-corrected and audited with their internal backroom, and sometimes they don't. And so trying to get that money back from those hospital systems and doctor facilities, it can take a year, 2 years plus. So the more work that people can do about questioning, and maybe the provider's right, and probably 85, 95% of the time the doctors are right, but when they're wrong, these are significant problems that are going to face people who are already having their paycheck to paycheck in question and trying to buy groceries and everything else that's going on out there. So where I'm questioning is everything: primary care doctor visits, specialist visits, flu tests, all those. Every time I go in, I want to see that bill, and I want to match that up to the explanation of benefits, because something on there that's wrong, it could lead to hundreds and hundreds of dollars each time. Yeah, told you, Grim Reaper, really some scary stuff.
Yeah.
And I feel like there's so many times too where employees will come to me and I have to give them that same unfortunate news where it's, no, you didn't hit your deductible, so it makes sense that you're paying X amount for this particular service. And they're like, oh,
yeah,
that's what that means.
Yeah. And that it leads into the employee education and the employee experience around employee benefits and those renewal times. The more education that can be done up front. And it's hard too, because you can give all the education you want. Felicia can go and do an hour-long meeting about the benefits, and here's the summaries, here's the SBCs, here's all the documentation. But if employees aren't used to using the healthcare system, it's going to go in one ear, not the other. And they're not going to come and complain until 3 months later when they finally use it, or 2 years later when they finally use it and say, I didn't know this. We did. And so the ongoing education is a big part of what we're trying to do more and more. And whether it's recorded videos about open enrollment, whether it's more in-person meetings. I know some companies are still iffy on in-person meetings, but the more resources that we can provide to allow employees to look back on some recorded videos or some sessions about how do I do this or what does this look like, that's a big part of what we're trying to do more and more of.
Why don't you take us through a little bit, one of those type of like employee training or employee introductory meetings that like, what's your ideal setting? You said there's a remote, you go to the office, but if you could say, I'd like to do it like, this is how we're going to be able to.
Yeah. For me, it's a hybrid. It's doing both an in-person meeting because some people.
With the whole company?
With the whole company, yeah. I think The one-on-ones are good, but sometimes by the 19th time I've had to retell the same thing each time to a one-on-one employee.
Yeah, that would be...
It's a lot. It's a lot. So if we can do in a group setting, so you get 20, 30 people in a room, however big the company is, and that can obviously change here in Western Mass. You can have 50 people or you can have 10 people. But the more that you can tell that story and talk about the benefits and really try to hit a high level, most times you're going to get employees who don't want to ask those questions. They're afraid to ask in front of their peers. It's a little intimidating. So we'll do one-on-ones after that.
Oh, I see. That makes sense. Yeah.
And so whether it's one-on-ones right then or we'll schedule a separate time to do that. But then
do you usually sit with the HR or business owner during that
on
situation?
the one-on-ones? No. On the one-on-ones, those are really with the employee because that's really where they're coming out with, here's the issues that I'm going through. I'm going through this surgery or this is what I'm going to have happen. How is this covered and which plan makes the most sense for me based on plan design and cost? And you definitely want HR or company representatives out of that room. I'm sure you don't want to be there and they don't want you to be there. And that's an important thing. So really let them be who they are to understand what's going on with themselves or their family. After that, after those one-on-ones, I like to do recorded sessions about the benefits, whether doing one live with employees and having their spouses attend and record that, or just do a recorded with me going through all the benefit materials. That way you can provide it to new hires throughout the year. You don't have to do a brand new session, but it also allows employees to look back on those benefits to see, what did Mike say about our summary, or what did he say about this plan versus this plan, and what does this mean? Here's his contact information. Here's his team's contact information. So something that they can always go back to throughout the year.
When you've obviously done a ton of these, but what sort of things do you do to get the attention of the employees? Because I'm sure that if they don't have anything going on, or if maybe they're much younger, or they're like, I don't really need to be worried about this. What do you do to get their attention and make them understand what's going on with the benefits and why it's important?
You mean other than scaring the crap out of them?
Yeah.
Yeah. Sometimes
maybe you do wear the Grim Reaper costume.
Yeah. Sometimes you need it, right?
Sometimes you need it. Yeah. I think nothing short of that. I think you have to prepare for that worst case scenario. It's great. I'd love to be able to talk to the employees. Say, nothing's ever going to happen. It's going to be great. You're going to have no co-pays this year. This is going to be awesome. It's just not the case. Mm-hmm. And you just never know. And the hardest part about our job is when we're working with employees is we're trying to plan out 12 months in a 45-minute conversation, and it's so hard for people to understand what they may or may not have throughout the year. As employees are older, they understand their needs are going to be different, MRIs, CAT scans, physical therapy, but especially talking to those people that are just coming off of their parents' plan at age 26, 27, 28, they're invincible. Nothing can ever hurt them. So that's the hardest part for us, is to explaining what really could happen and plan for the worst case scenario and giving them the options. And I think giving employees the choices, much like when we talked about the employees wanting to be heard from their employer, giving those employees the choices and let them make that decision, and that's pretty empowering for them. And I think they appreciate that rather than it's a one-size-fits-all approach.
When you say letting them make the choices, that makes me think a little bit about the different like benefits administration platforms that are out there. How does that play into your role?
Yeah, so we certainly, with Alera, so Alera is a company that we've now merged together. Weber and Grinnell is now an Alera company. We've now gone from 50 people here locally to about 3,500 nationally, I think 162 offices, which has a lot of positives to it. It's a little bit different being now part of a bigger organization, but the resources we have access to now is so much more than it was in the past. And the platforms from a benefit standpoint, and there's so many that are out there. There's Employee Navigator, B-Swift, Bamboo HR. There are so many different HRAs systems out there. It's really finding one that's comfortable for the employer. I think the biggest piece is, how does it integrate with payroll? The integration with payroll, and I don't say that because you guys are here with payroll. The integration with payroll. So
well, no, that's all right. Yeah, we sync up with Navigator. And several others also. Yeah,
it's such an important one, because other than that, if it's not linking directly with payroll, that's just another added step that somebody has to do. And when you're getting into payroll and making a mistake because you've had to enter it now 2 or 3 different places, that's a problem. That's when people are going to come knocking on your door saying, my payroll's wrong. I'm not set up in the benefits the way that I thought. It's now 3 months later. Can I get back on the plan? For us, it's really, there are so many different sites. It's getting those demos out to the employer to see which one really feels comfortable for them.
So outside of like traditional insurance type benefits, what's the one benefit that you would recommend all businesses offer to employees? Like, especially for retention, of course, but.
So the non-insurance?
Yeah, like just a general benefit.
Yeah, the one that, and I think about what our employees, what our satisfaction surveys have said at Alera and why they stay, or why maybe they've left during exit interviews. What's one of the reasons? I think the flexibility is a big deal, and that's both from a work-life balance standpoint. So not only from a remote standpoint, but flexible hours. to be able to, now again, some industries can't. Some industries have to be between those lines, between that 9 to 5. But if you have the ability to work 2 hours earlier in the morning or 2 hours later at night, just to get to your kids' sports or to get to your recitals or whatever it might be, for us, that's probably the biggest piece. And that's why people stay, being able to be flexible for them. And remote, it's been a big deal. Remote's still tricky for us. I think we're still trying to do a better job of tracking those employees to make sure the work is getting done. But again, that's all about trusting your employees and trusting that the work's going to get done. But the employees have really said having the ability to be flexible, to come in when we need to get done. We're going to work our 40 hours or our 35 hours. But if that could be done, we have one employee that sometimes will do work at 4 in the morning. Want to work 4 to 7, take a break, and then do their other stuff. But we know at the end of the day, the work gets done and that makes them happy. And then the work gets done in a more efficient manner because they're happy to be here.
That's really interesting too, because that goes back to the article that you referenced, about each generation wanting different things. I feel like millennials and younger people are really wanting that flexibility with hybrid and remote work and those flexible hours. Whereas older generations, it's probably not as important to them because they're not doing the school drop-offs. They're not doing the sports in the evening, like those types of things.
But it's also a little bit of a double-edged sword because then sometimes there's if that culture goes through, then you're like, now you're expected to answer at 4 a.m.
You are. Think about how much things have changed with the smartphone technologies, and it's like house arrest. I can't go anywhere. My phone's always on, and that's my phone. I really
sometimes I forget it.
I wish.
Yeah.
Oh my gosh.
But
I wish mine went underneath a car somewhere and I forgot it there.
But it is nice to forget your phone by accident.
It is
You're
nice.
like driving, you're like, oh,
it is nice.
No phone.
Yeah, no phone. It's nice to get away from that. Vacation is always the toughest thing for me to break away and take a full vacation.
Well, and think like people obviously did fine without the phone.
And without emails. That wasn't that long ago. You think about no emails. In 99 when I first started, and that was really, for me, emails were just starting. A lot of our communication were via fax coming through. So emails are not,
we had
forever.
I mean, we had so many clients that faxed in their payroll.
Yeah.
It's amazing.
And we still have clients
do.
faxing
You still do?
Yes.
Well, you know that think about it. If you started doing payroll in the 80s and you are always faxing it in, those are the people who are going to continue faxing it in.
Oh, always, yeah.
And it's usually these like sweet old ladies who run the books for like a manufacturing firm or something like that.
Yeah.
Like they just, that's what they're doing.
Yeah.
End of story.
Yeah. I mean, we still have a couple clients.
It's so awesome, Mike. It's in cursive too.
Isn't
all
it
the
really?
hours. Yeah.
It's amazing. Yeah. We still have companies that'll send in a census on just like a loose leaf piece of paper.
Yeah.
It's so different.
But I think it's so funny because despite the tech heavy culture, like, it's like, oh, what's the next release of something? And it's like AI powered this and that. And it's like our sales team still calls people and they'll say, oh, I do all that on Excel. Or I do it all in-house.
Yeah.
So the idea that like people just want the next iteration or the next version, of course there's companies like that, but there's also so many companies and so many people who still do things very manually.
Yeah.
I don't think we're like nearly as far advanced as we like to imagine.
No, I agree. Yeah. I think the other thing too and we talked about what are the other the benefits that people look at and what's the next trend out there. I think about 4 or 5 years ago, we did a couple of studies and took a look at what other countries are doing from a 4-day work week standpoint. And I'm not sure if Checkwriters has looked at that, or I know companies, it's hard.
Do you say other companies or
countries?
Oh, yeah. Because didn't one of the Nordic countries just launch that? Sweden or something?
Yeah, I think Japan ran a couple of test pilots from that. The efficiencies from the countries that have done it, I think there's 7 or 8 that have done kind of test pilots, not the whole countries have done it, but the efficiencies of this. And think about it from your own standpoint. I know you're working a couple extra hours per day, but to have 3 days off, and whether it's all in a row or scattered throughout, I would love an extra day to do many things. And while I'm at work, I don't mind an extra couple. I'm doing it anyway. Mm-hmm. So, and it's hard to do this until other companies do this, right? If you're the only one to do it, it can be very difficult to make that work or to be efficient for that extra day. You don't have the manpower.
Yeah, and there's some industries that people would be like, what are you talking about? You're closed. You're only open 4 days. Yeah,
exactly.
It's very hard. Everyone has to be on board. It'd have to be like a national initiative. It'd be an economic.
Well, at least industry specific.
Change the economic.
Because I just think about if schools suddenly did that.
Oh my gosh.
The fact that schools get out by 3 o'clock is already super challenging.
Yes.
And then they were just suddenly like one school year, we're going to do a 4-day school.
No, couldn't do it. Sorry, teachers, you're back in there.
Yeah.
But it's funny because if you think about the sweep of history, it's not like we've always been like, we must work from 9 to 5, Monday through Friday. It's always been different. And so we are probably primed for a pretty significant shift.
I think everybody is, and it's probably been more stressed maybe before COVID, but since COVID, but it just feels like everybody is more stressed. Everybody's trying to do more with less, and companies aren't. Maybe hiring has been tough for people. So people are so stressed already. And then I look at the normal retirement age, right? We're no longer at that 65, 67, 68, and that's going to continue to go up as the cost of everything goes up, the cost of healthcare. They're going to have to continue working longer. Who wants to be more stressed out till age 70, 5 days a week? Something has to give, something has to change to reduce that stress level. Otherwise, I don't know where we're going to be.
Yeah. Have you seen that show on Netflix called Blue Zones?
I have not.
So I think it's more profiling like what they eat.
Okay.
I'll give you a little background. You're probably like, what is he talking about? But blue zones are these areas of the world where the lifespan is
I've
very
been watching.
high.
I've been watching a lot of Netflix docuseries
You've
lately.
watched it? Yeah,
I haven't watched that one yet, but it
to
came
like
up.
100.
That's
they
good.
live to like
Okay.
100 or
Yes.
something, and they're like, what's going on there?
Yeah.
And a lot of it is diet. Like
Yeah.
I think one of them is like a region of Sicily.
Okay.
And yeah, the Mediterranean diet, obviously, it's like olive oil and fresh tomatoes and all that. But they're also saying it's very low stress. And the idea of the constant work is simply not present in that company. I actually studied abroad in Rome, and everything shuts down at 3.
Yeah.
And it's I think for several hours too. And it's not, and even if maybe the places might reopen if they feel like it, but it's not like anybody's like banging on the door like, where's the services and where's that? They're just like, it's a very different situation. And I think a lot of Americans, because we have this like hyper capitalistic mindset where we have to be at work, and we have to be seen at work, and we have to be seen to be busy and all this stuff. So yeah, it is interesting. But anyway, they're saying those blue zones, yes, it's diet. Yes, it's like a lot of family time, but it's also low stress, not as much, not the 40-hour work week.
Yeah. Even going on vacation, we've been to Paris and a few different places in Italy, and you can feel it. They're not as stressed out and freaked out as we are. It's not even close.
No.
Maybe because they're having some wine at 10 o'clock in the morning, but it's not.
And I also read like a lot of places in Europe, like their grocery stores aren't open until 9, 10 o'clock like ours are. They close at 5, 6 o'clock.
Yep.
So you have to go in the middle of the day to be able to get your grocery shopping done. Like you can't go after work because that's not that they close just like everybody else does.
One thing I was reading about, Mike, was this concept of more portable benefits. And we probably touched on it a little bit, but I read about this company called Stride, and they provide benefits packages that employees can take with them.
Yeah.
Not only if I assume not necessarily that they're job hoppers, but if they're independent contractors, if they they provide services to a bunch of different businesses. So can we talk a little bit about that?
Yeah, that's a fairly new benefit. And we certainly haven't had those employer groups reach out and talk about those yet. Those really haven't been in the mainstream, but that's certainly an item where it takes some of these employers out of the health insurance market and says, here's an allotment of money, or it allows an employee to put their tax-free funds away to put on the things that they really want. And so they really get to customize what benefits they want. I think the biggest challenges around those are going to be education. And so this is very similar to what was introduced about 2 or 3 years ago, these small business healthcare reimbursement accounts, I think the QSEHRA plans. And these are really where an employer gets out of the healthcare market. They put a certain amount of money into each employee's account, and that employee then goes on the individual exchanges and buys whatever plan makes sense for themselves or their family. And it's a great concept for an employer who doesn't want to be stuck in the middle of choosing a plan that's a one-size-fits-all for everybody, or maybe 2 plans that fit all 15 people. I think the tough part with these types of plans is that education level, and does it really feel and look like a benefit to that employee? So giving that employee that allotment of money to say you can customize your benefit plan is one thing, but if an employee says, now I got to spend 5 hours trying to research what benefits do I take, what do I do here, what makes sense for me, it starts to lose that luster a little bit to that employee. So I think a lot of kinks have to be worked out, but I think there is a market for that down the road if the right education is there for employees to have that concierge to then call up and have somebody really walk them through start to finish. But there needs to be innovation in what we do. There just hasn't been a lot of innovation in plan designs and different concepts. And I think something like this is very welcome. It probably makes a lot of people nervous in the healthcare industry, brokers, consultants, but I think we're at a point where there's a breaking point. It's pretty soon in our business.
That's a good point, though. At its face, it might seem, oh yeah, I choose all my own stuff. This is great. And then it's like, once it's your responsibility, it's a little bit, I don't know that I wanted to have that job.
Especially once you start getting those medical bills, or like the first time you have to go to the doctors or the emergency room, and you're paying
a lot, or even going to your doctor and now you're realizing your doctor is not in the network. Things like that that's a challenge. But on the concept of it, to allow an employee to really customize what works for them, because what works for a 30-year-old is not going to work for a 60-year-old. And when employer groups don't have the ability to have 4 or 5 or 6 or 7 healthcare plans, which a lot of them don't, that employee choice is out the window. You're really stuck with a plan that maybe doesn't suit your needs the best. So these types of concepts I think are very welcome. I think some things have to be ironed out first.
So, Mike, you're an owner of the agency now.
Yeah.
But you've had a ton of different roles there.
Yeah.
So you started out just in the sales, probably went into management, and take us a little bit through the journey, and maybe maybe do you ever look back and think, you know what, I liked that role I had 25 years ago a little better?
Yeah, there are so many sliding glass door moments here in my career. I know coming out of college, out of Springfield College, insurance was never on my radar. I had a number of job offers, and before I took those job offers with insurance companies, I had an internship opportunity with a company called Wolf Associates. And Wolf Associates was a sports marketing firm in Boston. I love sports. I played hockey in college, and that's all I ever wanted to do. Had an interview, and the guy that interviewed me was Bobby Orr. And for those Boston sports fans, that's the coolest thing ever. And so it was unpaid. I couldn't live in Boston with no money, so I declined it. And here I am in insurance. I think I lost a bet and doing employee benefits. But the roles that I've seen from an employee benefit standpoint, I worked in a life and disability role. So I got to see life and disability kind of way outside of healthcare and what people are going through as they're trying to get back to work and they're disabled and can't earn that income. And then in 2007, came over to the employee benefit from a health insurance standpoint as a consultant. Saw that role from a sales standpoint, what I liked, what I didn't like, and what I really found myself enjoying more is working with those employers and employees, not so much from a sales standpoint, but how do we put plans in place and how do we make sure that people feel as if they're not just a number, that they're well taken care of. Getting more into when our business at the time, Ernst Financial, back in 2016, we then sold to Weber and Grinnell. Working with Matt Geffen and Bill Grinnell over there, just had a really good relationship and a good service philosophy that I think made a lot of sense for the clients that we worked with, and really tried to move away from the actual door-to-door knocking on doors sales that people love so much, hearing insurance salespeople, and really focused on that service aspect. But one thing that Alera has allowed me to do is to take that to a different level, but also work directly with our employees. How can our employees have a sounding board at such a big company like Alera that's 3,000, 4,000 employees, and feel as if what they're asking us to do is going to be listened to? And that's something I take a lot of pride in, as much as I do working with our clients and making sure they have a voice. But our employees mean so much to me. Our company wouldn't be anywhere near without our employees. So that's a fairly new role for me, and I enjoy that so much, not just from the employee benefit employees that I work with, but from the property and casualty, the administration side, all of that.
How many employees do you guys have?
So in our office, both in Northampton and Holyoke, and those that are remote that report to us, we're about 48 or 49. But with Alera total, I think Alera Corporate is now around 3,600. About 162, 163 offices. Much bigger than what a lot of us are used to. So that transition back in 2021 was difficult for employees to now not have a dedicated HR staff here in the office. And now everything goes to Alera Corporate. I think it can be scary for people. But it's given me a real good appreciation for what employees go through when they're just not sure where to go or who to turn to, and how important it is. So for somebody like you that wants to be that sounding board for an employee, they can vent or they can talk about what works, what doesn't work. Sometimes that can mean the difference between keeping an employee or that employee saying, I'm going to go somewhere else if I don't feel appreciated.
Yeah. And it's also from the benefits standpoint. So speaking of a larger company, we have a few employees where they're on their spouse's plans, and their spouses might work for a really large company. Yeah. Some people even have a spouse that works for an overseas company, and they choose to get their benefits through us because that's what they tell me so often is, I'd rather just talk to you about it.
Yes.
Instead of try to contact this really big 1,000-person company. So I think those connections are really important to people in any industry, in any company. Having that person that they're able to talk to and that they can trust is so important to them.
Yeah.
It sounds like that's how you differentiate in the market, because every company's going to need an employee benefits
Grim Reaper.
Yeah.
Yep.
They're going to need one, but you try to be like the more personable Grim Reaper.
I have to be.
Yeah.
If there is such a thing, I have to be. So one of the parts that what I really do like about the industry I'm in, when we're really out there competing with other consulting firms, is that a lot of times the rates are set by the state, by the Division of Insurance. One consultant can't say, we have more business with this carrier, we're going to get lower rates. So a lot of times from a rate standpoint and a product plan design standpoint, there's not going to be many differences. So we've really got to come up with a way, how can we be different? And so for us, it's not from a number standpoint, it's maybe we can get creative with HRAs and HSAs that we talked about, but how can I really be that extension of that team? So we're all paid ourselves from a compensation standpoint by the carriers, and everybody's paid the same. We really need to, in the way that we try to look at it, and the way I've always tried to look at it is at the end of the year, you need to trust us as a valued employee of your team, and the commission revenue that we would receive on your behalf by doing the work throughout the year, did we earn it? And that's a question to have every year. And if we didn't earn it, we're probably not the best fit as your broker consultant partner. And that's a mindset that our team, we've tried to adopt, because those phone calls that we get when employers are calling or employees are calling that need that help, if we're not there, we're not an employee. We'd be fired if we work for that company. So we need to remember that. We need to remember that the client is why we're here, and we need to be like a trusted employee as anybody else.
I think that's a really good way to think of it for other businesses who work with their brokers specifically, and they want to think of that person like that. And again, to that earning your commission standpoint, like you want to make sure that you're happy with the work that person's doing, because in one way or another, they are being paid for it. And you want to make sure that they're a partner with you and not somebody where you are constantly frustrated with them or you can't get a hold of them, something like that. So I think that's good advice for anybody who either is looking for a partnership like that, or maybe has one and it's not great and they're rethinking it, just making sure that you are like an extension of the company in that sense.
Yeah, and I make a joke all the time about when I talk to new clients that are coming on board, or ones that we've had for a long period of time. And this is where I probably set myself up for stress and failure down the line, is if you send an email to me or you call me about something, and if you don't hear back in a couple of hours, probably do a wellness check, because something's wrong. Look, if it's important enough for you to take the time to send me an email about a claim coming up, or that an employee is going through a difficult situation, or you as the employee is going through something hard, and we're not willing to take the time to call you back, that's a problem. So if it's hard enough for that person to reach out to us, we need to do a good job of getting back to that person, and not in 24 hours. This is something that sometimes can't require 24 hours. This might be an immediate thing that we need to, and we're looking into it, but here's our contact, here's what we can do next. But that's what we do is pretty important. I know sometimes insurance gets a bad rap, but we're dealing with some significant and sometimes life and death situations of what employees are going through, and we've got to remember that. And sometimes it's easy to lose sight of that, but we're dealing with ways that really affect people's lives.
It sounds like you've got a great work ethic, despite the fact that you want a 4-day work week.
But there's also 70 hours in that 4-day work week. But yeah, for sure.
But where do you think that comes from, your work ethic?
It's that my parents would kill me if I said it wasn't them, but it's them. It's to see the effort they put in. Now, growing up, and this is where the world is so different. I'm 47, so growing up 35 years ago, we had the ability, one parent was home and one was working, and our neighborhood, middle class, and a lot of people were just like that, because you could afford that. You could afford to have one person working and one not to stay home, and everything like that. And so the work ethic is not just from my dad, who put on a shirt and tie and a briefcase and went to work every day, but my mom, I could see everything she would do around the house or to get us ready for sports or school or all those things. So I think really from them, just that how important that was to not just a work ethic, but just a treating other people aspect to it. The treating other people is, for me, it's everything. Nobody can do everything on their own. And so like Gretchen and Kim and Deb, these are my teammates from the benefit side. It's important that we're all on the same page and we all have that feeling and have each other's backs, because if you're not willing to go, through a wall for your team, then it's probably not the right team.
That's also good leadership advice too.
I read a lot. I do a lot of reading. I hated reading as a kid, but I enjoy reading so much. So leadership books are important to me. I do like to try to read as much as I can. And when I'm not watching the Checkwriters podcast, plug, let's not cut that one out. It's important because things change all the time. And we get so caught up in work and kid stuff and all over the place. If I've got 20 minutes or 30 minutes, can I read something? What is somebody else doing? But again, nobody can be, and our partners and I, we talk about this all the time. It's just making sure that people want to come here. How do we make this a safe, fun environment? And sometimes we try to have too much fun talking about employee benefits, but we're here at work sometimes more than we see our families on a weekly basis during the week. So how can we make that
it's
an
weird to
enjoyable
think
time?
about that.
It's tough.
Yeah.
It's
when people say that out loud, you're like, ugh, really?
It's true. Yeah, it really is. And everybody's running around. Yeah. So how can we make that time enjoyable? Yeah.
Mike, owner of Weber Grinnell Insurance, the You call yourself an employee benefits consultant, I notice. I like that a little better than the other options.
I do too.
Yeah, but it makes sense with what you highlighted. You really do serve as a consultant for the HR director, business owner, whoever's in charge of benefits, but also your accessibility to their employees obviously is a huge part of it and a big differentiator for you. We really appreciate you coming on.
All right. Thank you so much. I appreciate this, guys.
Thank you.
Thanks for listening to this episode of Checkwriters. Be sure to follow us on Apple, YouTube, or wherever you view your favorite podcasts. Stay tuned for future episodes where we'll continue to uncover the secrets behind successful organizations.